कैसा है?
Three. Hi भैया, I'm good. You tell.
So, how is your preparation going? Are you studying well?
Yes भैया, मैंने मतलब सब देखा and I have some doubts in that previous classes. So I have noted my all the questions
Okay.
and I can share that file with you.
Okay, I will come to your doubts. Before that, tell me, have you learned about stock market history, the slides that I shared, and some PDF
Yes
links
भैया.
that the PDF links that I've shared about different kind of derivative volumes across exchanges? Have you studied about NSE and BSE, the kind of products that they are offering, the different kind of, and more importantly, the different kind of indices that we are trading?
Yes भैया.
Also about
I've
the
studied all the.
and don't forget, you also need to learn about sector specific indices, broad based indices, and then benchmark indices like Nifty, Bank Nifty is a sectoral indices. All these concepts you need to be clear before moving ahead. So I believe you have learned it,
Okay.
and
Yes.
whatever doubts that you have now, we will take them one by one. So okay, come up with your
Okay.
query. Okay,
Yeah. Let me share screen with you.
sure.
Yeah. Can you see the screen?
Yes, I can see. So your query is, first one is, why NSE is more popular or bigger than BSE? So what happens, son, so we know that BSE existed since centuries. Okay. So
Oh, yeah.
BSE existed since centuries. So BSE had floor trading model. You must have seen in some
Okay.
old movies and all where they
Yeah.
uh, get into a big hall that's called ring and stock market ring, and where they with show of hands they deal in stock. So show of hands
Yeah.
and
I've
shouting.
seen that.
This is how they dealt in
Mm-hmm.
stock. So in 94, 95, NSE came. NSE, National Stock Exchange of India, was again promoted by various PSUs. The whole idea of NSE was to bring in technology into stock trading. So
Okay.
NSE was going to launch electronic or computer trading on computers, where we need not have floor. All trading was taking place. Just a second, I got a call. That is through computers. So NSE was bringing in newer technology, and also see what happened in 1992. We saw that big bubble burst, or popularly known as scam 92, the Harshad Mehta
Yeah.
story.
Harshad Mehta
So
scam.
what that year 92 did was, year 92 brought lot of popularity of stock market. So there were like millions of people who were first time investors, or first time who had a had some investments or holding and all. So the number of IPOs that came during that time were like enormous amount of money was raised from public. Maybe some good companies, bad companies, that another thing, but the kind of popularity that now share market was seeing was immense. But there was a gap. BSE could not have actually accommodated for the kind of interest or the volumes that market was expecting. And in year 1991, India growth story also started when India opened up for the overseas investor, when India
Okay.
opened up for
Foreign
FIIs,
investment.
FDIs, etc. So
Okay.
many things were happening at the same time. India was going global, and at the same time, after 92, there was a lot of interest from general public in stock market. So and now NSE had the right product at the right time, that the stock trading was going to happen on electronic platform, which was obviously more transparent, and way more transparent than what floor trading was, and way more efficient. Everything was before your eyes. So NSE brought the right product at the right time. So although BSE was century old, but NSE came with the right product at the right time. They used technology better. So NSE had a good head start. So very soon NSE has overtaken volumes of BSE. BSE also implemented same technologies, but
Okay.
NSE had already taken a lead, and BSE was always doing the catch-up game. And then what happened?
Mm-hmm.
NSE kept on introducing derivatives. NSE was the first to introduce index derivatives. Nifty got more popular as a benchmark index, and then individual stock options. So Nifty was always launching good products at right time, and Nifty was getting good liquidity for its product. So people also moved from more and more people moved from BSE to NSE. So this is how NSE took lead. So basically, in a nutshell, we can say it was like right use of technology and right product availability that gave NSE such a huge huge lead over BSE. So both are
Okay.
coexisting, but again, NSE is far more popular, and NSE is pretty much exclusive player when it comes to F&O space. Although BSE have some F&O space, but that is very, very small as compared to what NSE
Yeah.
derivative products are there. So hope that clears your question about
Yeah.
more popularity of
Okay.
NSE. Yeah.
But I
So
have seen in news that BSE is launching some new Sensex and that some futures options contract in Sensex in
yeah.
now.
So we know that like
Yes.
Nifty index, the BSE parallel of Nifty 50 is Sensex, and
Yeah.
we have Bank Nifty in NSE, and similarly we have BankX in Bombay Stock Exchange or BSE.
Okay.
So these are the two parallel indices that are less popular as compared to NSE. So
Mm-hmm.
BSE has already launched the derivatives in these two indices, and they are getting fair amount of liquidity. They are getting fair amount of
Okay.
liquidity. So I would personally want that BSE also get bigger in size, and we as trader also have one more option in not in terms of product but
To
also
trade.
in terms of platform to also participate in NSE stocks and also participate in BSE products as well. So let's see what happens with this new launching.
Okay. Okay.
So now your any more question on this?
No, no, bhaiya.
Okay, so now your second question. Why
Yeah.
Indian stock market doesn't have one index which represents all stock like Wilshire 5000? Okay, now see, obviously there are three categories of stocks: the large cap, the mid cap, and the small cap.
Mid
Yani,
small cap.
that means large capitalized, medium sized companies, and small cap companies. So there could be different qualification, but let's say anything that is which has a market capitalization of more than 5,000, I would tend to call it large cap. And but even
Okay.
even I have seen so many companies which have market capitalization of 10,000, 15, 20,000. They are also called mid cap companies. So it's not a particular point where we say this one is mid cap, large cap, small cap. But then again, basically the larger size companies like top 200 companies, maybe or maybe top 100 companies, maybe large cap companies, other maybe mid cap, and then we have small cap companies which might have market capitalization of 100 crore, 500 crore. So we do have index like Nifty 500, which are broad based index of 100. We do have index like mid cap 100, which is average of your mid cap stocks, mid cap, and that 200 stocks. So it's fairly broad based index. What the thing is that these indices based on 500 stocks or 200 stocks, they are actually not very popular. So you remember when you go back to slides from the last classes, if you can open Google, I think there is NSE 500 index as well. If you can go to Google, please.
Oh, wait.
Yeah, your screen is shared. You go to desktop and then open your Chrome.
Okay.
Yeah, here you type Nifty 500. See,
Mm-hmm.
so we do have index like Nifty 500.
Yeah. Nifty
Nifty 500
500.
would see Nifty 500 covers 96.5% of your Nifty 500 covers 96.5% of the total corporate capitalization.
Yeah.
So only 3.5% of market cap is left, and it covers 96% of your total turnover. So we do have such
Mm-hmm.
indices, but they are
Okay.
not popular and they are not considered as any benchmark for study purposes. So that answers your question that we do have such indices. It's not that it's not there, but popularity is limited to few indices like Nifty 50, Bank Nifty, Fin Nifty, and Sensex and BankX, etc. Okay, so let's move ahead with
Bhaiya,
yeah.
one question. Why these index are not popular in India? Matlab, why people don't
So
follow
see,
this
we last
instead
time
of.
studies that there are several different type of indices. Indices can be made
Yeah.
on the theme, the market size, the sector, whatever. There can be 100 different kind of indices. So see, all cannot be popular and all cannot be used by people. So it is a basically use case. If more people are looking at that stock at that index, then that index becomes more popular, and that then again that index is shared more in media. There is no particular reason. Like for example, for my own trading, I refer to mid cap 100 index a lot. But as
Okay.
such, mid cap 100 index is not very popular in masses.
Yeah.
Maybe only about 4
Mm-hmm.
5% of the traders might be looking at it for their trading purpose. Some people are looking. I met a gentleman today who says he's regularly looking at all the different sectorial indices for his investment decisions. So he's
Okay.
keeping a watch on every sector's indices like pharma index, IT index, and all these indices that we discussed last time, PSU index, and all that. So he's keeping an eye on those indices for his investment decision. So it really depends how a person uses. So I am sure many people are also using this broad based index for their investment purposes, but just that they are not too popular with masses. So that's the answer.
Okay.
So we did discuss about various method of calculating index. I talked about weighted average, free float weighted average method, and all those methods. So before that, let me also tell you, make a note that you have, obviously in your case you do have the basic knowledge of statistics because you have done your PGDBM in finance. But those, let's say somebody in your place who did not had this statistical background, you need to learn everything about averages and moving averages and weighted average. What is so in statistics we call it measure measures of central tendency, mean, median, mode, etc. So I
Yeah.
request you, if you are not aware or if you are not too sure about it, go to YouTube, just type in measures of central tendency, mean, median, mode, and understand about this. And there you will also know about simple averages and weighted averages. So before moving
Okay.
ahead, we need to understand the concept of averages and weighted averages. So in your case, you are already aware of weighted average. So we'll move on to how do we calculate our index here in India. Okay.
Index. Okay.
So I'll go. Let's say we talk of Nifty 50 index. How Nifty 50 is calculated, right? So do you remember I shared this NISM booklet of Series 8 NISM booklet, the PDF of
Yes,
NISM
yeah,
booklet.
yeah. Mm-hmm.
So you if you have that ready, you can kindly open it.
Yeah. Hmm. Yes. Can you see this?
Yeah, I'm able to see the front page of the series. So what you
Mm-hmm.
do, you go to the contents. There you will have one chapter dedicated to this index calculation.
Okay.
Yeah.
Yeah,
So
this understanding index.
understanding index. Yeah. These 4 5 pages are very important.
Okay.
And
50.
as I suggested you over the phone, do keep on reading this step chapter by chapter,
Okay.
NISM series 8,
Okay.
because it is a good basic knowledge and it's well structured for Indian market. So at this point, I would suggest that you uh, have it and down you start reading it step by step. So this
Okay.
one is introduction. Index is a statistical indicator that measure change in the economy in general or in particular areas. In case of financial market, an index is a portfolio of securities that represent a particular market or a portfolio of a market. Each index has its own calculation methodology and usually is expressed in terms of change for a base value. The base value might be recent as the previous day or many years in past. Thus, the percentage change is more important than the actual numeric value. Now, this is also very important. So somebody might say, "Arey, Nifty to 19,000 and
Hmm.
Bank Nifty is around 63,000. So Bank Nifty is 63,000, Nifty is 19,000. So sorry, not Sensex is
Bank Nifty.
63,000. Sensex is
Yeah.
63,000 and Nifty is 19,000. So wow, why is it so? Does it mean that Sensex is something good about it, that it is priced higher? So the logic behind
Hmm.
it is that Sensex is thus just a statistical measurement, just like a percentage. For example,
Okay.
somebody is having a net worth of 1 lakh rupees and somebody is having a net worth of 1 crore rupees. Now, one person who had net worth of 1 lakh rupees added 50,000 rupees in a particular year to his net worth. And somebody who had 1 crore rupees added 20 lakhs to his net worth. So, person who added 50,000 added actually 50%. And person who had 1 crore added 20%.
20%.
When we talk of index, we are not concerned about 1 lakh or 1 crore. For index comparison, we will say that one person moved 50% up and other person moved 20% up.
20%.
So basically, we are putting it in statistical terms. So when we talk of statistical terms, we are not concerned about 1 lakh or 1 crore. So similarly, here with indices, we are talking about the mainly percentages. So when we say Nifty went up 2% or Sensex went up 2%, so basically, it doesn't mean that Sensex went up 2% over a base of 65,000 means anything different than Nifty moving 2% up over a base of 19,000. They basically means the same thing, that both are moving 2% up. So this is also important, that it is all a change in percentage. The percentage change is more important than the actual numeric value. Financial indices are created to measure price movements of stocks, bonds, T-bills, and other types of financial security. More specifically, a stock index is created to provide market participants with the information regarding average share price movement in the market. Broad indices are expected to capture the overall behavior of the equity market and represent the return obtained by typical portfolio of the country. This thing we have covered in previous classes. Now, your specific question about the calculation methodology. So if you can kindly scroll down, I'll show you the type of stock market indices. Market capitalization weighted index. So if we read it, if you kindly read it, please.
In market capitalization weighted index, each stock is given weight according to its market capitalization. So higher the market capitalization of a constituent, higher is its weight in the index. Market capitalization is the market value of a company calculated by multiplying the total number of shares outstanding to its current market price. For example, ABC company with 5 crore shares outstanding and a share price of rupees 120 per share will have market capitalization of 5 crores into 120. That is 600 crores.
Yeah, go ahead, keep going.
Let us understand the concept with the help of an example. There are 5 stocks in an index. Base value of index is set to 100 on the start date, which is January 1st, 1995. Calculate the present value of index based on following information. Should I read this data?
So no, I'll explain you. So basically, they have taken example of different. No. Scroll down a bit. So
yeah,
see, here there are different stock, and this is the stock market price earlier and stock market price now. So this is the market capitalization of 18,800. This is total market capitalization of 5 different companies. This is market capitalization of 5 different companies. Okay, so that is when it started. Let's say market capitalization was 100. So when market capitalization 100, the total market cap value of those companies may be around, let's say 6,000-7,000. Now it has come to 18,800. So index value becomes 296.28. Now market values further, total market value of all these 5 companies go from 18,800 to 42,500. So now index value become 525. So it is basically nothing but simple weighted average calculation of a portfolio of stock.
This free float market cap.
Free float market capitalization.
Okay. In various businesses, equity holding is divided differently among various stakeholders, promoters, institutions, corporates, individuals, etc. Market has started to segregate this on the basis of what is readily available for trading or what is not. The one available for immediate trading is categorized as free float. And if we compute the index based on weights of each security based on free float market cap, it is called free float market capitalization index. Indeed, both Sensex and Nifty over a period of time have moved to free float basis. SX40 index of
Okay, okay,
MCX
okay,
SX.
okay. So see, free float market capitalization basically earlier in earlier paragraph we talked about this outstanding
Weighted
shares,
market.
outstanding share or the
Okay.
issued share. So let's say company has
Mhm.
issued 1 lakh share. One out of 1 lakh shares, 60% of the capital, 60% of the shares, that is 60,000 shares are still with the promoters. So those shares
Okay.
which are with the promoter itself, they are not called free float because they are not trading in the market. They are not trading in the market. So
Okay.
only 40% of those shares will be called free float. So
Free float.
what happens? Earlier we were calculating on the entire issued capital of the company. Now we have decided in the free float, what we do in the free float, we only take the free float section of that capital. So let's say company who is having a market capitalization of 1000 crores, but free float is only 30%. So for weightage purposes, we will give weightage of 300 crore to that constituent of the index.
Company.
So a
Okay.
company who might be having, let's say, 2000 crores of market capitalization, and that company is having only 10% of free float only, 90% is locked up with promoter. So therefore, weightage purposes, we will only calculate 200 crores for index calculation purposes. So here we are talking about free float only. A company which is 500 crores in capitalization, but it has 80% free float. So in that case, we will use for like it we will use 400%,
400.
400 crores as the constituent into capital. So this is how free float will impact the calculation. What is exchange traded funds? ETFs. They are popularly called ETFs. You go to Google.
Okay. Hmm. Should I type ETFs?
Yeah, exchange ETF you can write.
Okay.
Open it. Gaurav, have you heard of investopedia.com?
No, bhaiya.
Investopedia.com is really the encyclopedia of the investment. So that is the
Okay.
why this term comes Investopedia. So any term, anything you want to know about anything, it is a very good site. An exchange traded fund is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs will track a particular index sector, commodity, or asset, but unlike mutual fund, ETFs can be purchased or sold on an exchange as the same way as the regular stock can. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETF can even be structured to track specific investment strategies. So to explain you in simple terms, let's say I create let's say we talked about pharma index,
Okay.
different kind of indices, sectoral indices we talked about.
Yeah.
So there is called pharma index.
Mm-hmm.
Okay. So if you want to invest in pharma index, how would you do that? There are no derivatives or direct trading happening. You are tracking that pharma index,
Okay.
but you want to invest in that pharma index itself. You reckon that okay, next 5 years there will be huge growth in pharma industry, and now you want to
By
participate in that.
buying pharma shares.
You can buy it. Let's say there are 15 different pharma shares, so you can buy those shares.
Yeah.
But now here is a catch. You have very limited amount of capital. Let's say somebody has 1 lakh capital and there are 15 stocks to
Okay.
be bought. So how do you distribute 7,000 on each stock? Or and index is not equally weighted. Like all those 15, 17 shares are
Okay.
not 5-7% each. You have like some stock is 20% of the port that index, and some is 5%, 3% like that. So it will be a lot of hassle to buy those shares individually and keep a track of those.
Okay.
So what, as a fund manager, I have a plan. As a fund manager, what I do, as a fund manager, what I do, I I calculate a I create a fund ETF. I create an ETF where I create an ETF where I buy all those shares, all those 15 shares. Let's say 15 pharma shares were there in that index. I buy those 15 shares and buy and I actually buy them in the ratio in which in which they are standing in that pharma index. Let's say Renvex is 10%, Oro Pharma is 5%, Glenmark is 7%. So I I make an index and I make an ETF, exchange traded fund. Now, when I made that fund, you want to buy it, you can directly buy it from the exchange, and you will be
Okay.
buying somebody who is a seller. So somebody is a buyer, somebody is a seller. So the fund manager, ETF manager, will be managing that portfolio according to a predefined index. ETF will track a
Okay.
particular, see here it mentioned ETF will track a particular index, sector, commodity or other asset. So mutual fund, we go to mutual fund company and buy it from there. But ETF is similar to mutual fund, but it is, as name suggests, exchange traded fund. So it is a mutual fund basically which is traded on exchange, and it is
Okay.
traded like a share only. And now ETF is very broad based. Even there are gold ETF where you need not buy physical gold. Somebody has created a fund which is keeping physical gold, and now you can invest your money in gold ETF. How it will benefit? Can you go to jeweler and say, give me gold worth rupees 1,000 rupees?
No.
Can you go give me gold worth rupees 5,000 rupees? I am talking raw gold. Can you go raw gold? Give me
No.
5,000 rupees.
No way, it's not possible.
That person say, no, 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 that is just like 0.8 gram or less than 1 gram of gold.
Yeah.
We don't deal in such quantities. So, and even if somebody is ready to give it, he will charge too much of premium for that. They say, okay, we will give you gold worth rupees 5,000, but we will give you only half gram. So this obviously will not be acceptable to you. But there are gold exchange funds or gold ETFs, exchange traded fund, where you can actually buy 1,000 rupees of gold, and that will be
Okay.
held in your dematerialized form in your DP. So ETF has it. So similarly, there are ETFs related to real estate, where you can actually invest in real estate projects through ETFs. So there can be different complex products can be structured using ETF platform where money can be raised for such purposes. Okay, and we can
Okay.
again deal with ETF later in more detail. But you can also refer to this Investopedia page for greater learning about ETFs.
Okay. Yeah.
We again go to that PDF, please.
Yeah.
Can someone invest or trade in an index? Okay, so part of the question we have already covered in that question 4 that we are discussing. Can someone invest or trade in an index? So now let's say I am not much knowledgeable person. Somebody tells me
Okay.
that I see Nifty going up in next 5 years, and I'm willing to put some money into it. Let's say I have 10 lakh rupees and I say, okay, I want to invest 10 lakh rupees into Nifty 50
Nifty.
or Nifty. So how do I do it? How do I do it? How do I invest in Nifty? That is your question, right? So one question is that Nifty 50 has 50 constituents, and
Yes.
all are different ratios. Like Reliance might be having 7-8% of weightage, might
You
be having
told that earlier
8%
in
of
class.
weightage, HDFC might be having 3-4% each. HDFC. So similarly, like different stock might have different weightage. Some might be having 0.2% weightage, 1.5% weightage. So one option is that I divide my 10 lakh rupees into exact ratio of those stocks and make an investment. Now just imagine how cumbersome that process would be. Buying different stocks, different 50 stocks. How do I buy them in one go? Prices are always keep going up and down, then calculating the percentage of each of those index and then keeping a track of them. So it is going to be a very complex task. And in some
Okay.
situation, there is some shuffling in the index as well. So in
Yes.
like some stocks come inside come some indexes, some stocks go out of index, and there is some situation of split dividend, etc. So all these, how will you keep a track of all these things? So to solve this problem, somebody comes with the idea of ETF. They will create mutual funds
Okay.
or index funds, which are popularly known as Nifty Bs. Nifty
Okay.
Bs benchmark exchange traded equity funds, BEES is the so what they are doing, they are charging a small management fees for maintaining that fund, and they actually invest in Nifty 50 stocks, all those Nifty 50 stocks in the same proportion that they are in the index, and then they create a fund out of it, and then that ETF is tradable on the exchange platform. So if you want to invest,
Okay.
let's say if you want to invest 10 lakh into Nifty, then you just go and buy 10 lakh worth of Nifty Bs from the market. So your 10
Okay.
lakh is actually invested in the same proportion in that of
Nifty.
index by that fund. For running that fund manager is charging a very small fees, maybe 0.25% or something. But that saves you a lot of transaction cost, because buying and selling 50 stocks separately might
In
be more
different
expensive
ratios.
than buying one
Yeah.
ETF at the same time. So this way you are able to directly participate in 50 stocks. So again, this is also the beauty of ETFs, that you can create
Okay.
some structured products which are solving a good purpose for investors. Earlier I gave you an example how a person with 1000 rupees or 5000 rupees can invest in gold. Here
Yes.
I took an example of 10 lakhs, but somebody even with 20,000 rupees can also participate in Nifty 50.
Okay.
He can buy ETF of 20,000 value and can participate in Nifty growth story. So this is how it covered. So ask me any more questions that you might have.
No, bhaiya. Uh,
Okay. So do call me with your queries that you have. So
Mm-hmm.
and that's about it. Next we will meet and take things forward in our trading.
Okay, bhaiya. Okay, sure.
Okay, take care. Bye.
Okay, bhaiya. Bye. Bye.